Hello, ladies and gentlemen. Welcome back to another episode of Commercial Real Estate Secrets. We have a guest today that I'm very excited about. I've been following him for a long time. His name is Richard Fertig, and he's the founder of the Short-Term Rental University. Now, he was the manager of a 4.5 billion with a B hedge fund back in the day, and he's been in real estate for 23 years now. So a lot of wisdom here. Very excited to talk to him. Without further ado, Richard, it's a pleasure to have you on the show.
Thank you so much for having me, and thanks for inviting me. And I hope that this serves your audience well. I look forward to it.
Yeah, great. I'm sure it will. So yeah, I want to dive in. I want to get to know your story. Personally, I'm a big fan of yours. I mean, I've subscribed to your YouTube channel. I listen to your posts on Facebook. I watch them on Facebook, and both groups that you have, Short-Term Rental University and Ready Wealth Management, have both been very informative for me. And so I'm just curious.
Profitable, I hope.
Yes, very profitable. Yeah. I was telling you earlier, you made some recommendations in April of 2020 about what stock picks you would have. I think I picked 8 of the 10 that you recommended, and they all played out very well, very, very well. So thank you for that.
My pleasure. I hope a lot of people followed that.
Yeah. If everybody who did follow it, it paid off nicely. So, but yeah, I want to get to know Richard, right? I want to know who you are, what makes you unique. And how you got into all this. So like what part of the country are you from originally?
So it's a great question, except I'm not part of the country as in the United States of America. I was actually born and raised in Costa Rica. So I have a long, crazy story that ultimately culminates in the true American dream. And so if you'd humor me for a minute, I'll walk you through that. But
yeah, absolutely.
Yeah, so I was actually born and raised in Costa Rica. My mother's Costa Rican. My father was American. He was born in 1926, which is, the Great Depression, and was basically orphaned. And without, going into all of the details, I'm the first person who graduated even middle school from either side of my family. And then not only did I graduate middle school, I went on and had a really successful high school career. I'm just kidding. But then went on to an Ivy League college where I was a double major, psychology and economics at Cornell University, and then ultimately went and got my MBA from the University of Pennsylvania, the Wharton School. So, from purely just a educational perspective, it's mind-boggling to me that in one generation you can go from literally being no formal education to double Ivy League. My parents sacrificed quite a bit to make that happen, and they believed in education. They just didn't have the good fortune that I have and that I'm passing on to my 3 daughters. So I feel like it's really important that I make the best of that and share with others that either don't have that good fortune, either financially or access or resource wise. And that's why I launched Short-Term Rental University. And that's why I try and help people with stock picks, and more recently with crypto, Bitcoin specifically, because I recognized, my good fortune and all the sacrifices and good decisions and things that, went my way that have enabled me to have this voice and this platform and this quality of life. And so it's my little way of giving back to as many people as possible.
Well, that's great. Yeah. And, we definitely appreciate that. I definitely appreciate that as well. So when you were younger, you were in Costa Rica. What was the childhood like? Like, did you know that you were an entrepreneur? Were you doing anything, like starting businesses or side hustles or anything like that at an early age?
Yeah. So what I would say is I didn't recognize it at an earlier age, meaning, too often in life, and there's a lesson here, you recognize the gifts that you were after they've passed and only upon reflection. So one of the gifts that I was given was the fact that I was the first educated in my family, and my father was an entrepreneur and a hustler and did as many different things over the course of his life. He was basically orphaned during the Great Depression and had to make it, through all of that, feed himself, and then grew a family. And so he's incredibly intelligent, self-taught. But growing up in that household, I didn't think of limitations, right? Like anything was possible. Anything that you set your mind to, you could accomplish. If you were intelligent and diligent and hardworking and persevere, you could do anything. And so it's kind of interesting, when I went through the formal education, I met all sorts of different individuals that had a different path to get there. Most of it was more traditional and linear, and their parents were lawyers and doctors and accountants and dentists and so on. And so like they were sort of playing in this sandbox that had all sorts of rules and restrictions, and this is how you do it. And it's very linear, right? Like you study, you do well, you do this, you do that. And like outcomes, on the other end is a prescribed outcome. And mine is just like, well, you could do anything you want. So yes, as an early child, starting at age 10 or 11, 12, I was constantly trying to do little things to make a spare buck and save and invest. And my father taught me to invest in mutual funds initially when I was probably 11 or 12.
Wow.
I've passed that same thing on with my children. So my children have been investing in the stock market since they were 11 or 12. They've done quite well, and we have a lot of fun with it. We make it a game, and at the time they don't really like it when I give them Christmas presents and birthday presents in terms of stock contributions to their account. But then as we go through and we learn and we talk about companies and they pick and then they follow, the account values increased a lot. Now they've got this little competitive thing going. And so I think it's kind of interesting about and reflect how you grew up and what lessons you learned and what rules you were, constrained by, and whether you had those. And so for me, I constantly do things that no one else has ever done, right? Like I don't follow anybody's lead, whether it's the short-term rental university channel or now what I'm creating, Edge Camp Sporting Club in the Outer Banks. I don't need the comfort to know that somebody else has done it and I'm just going to piggyback. In fact, I find that often is more risky. I think there's less risk in playing in the blue ocean space where no one else has done anything. And I've done that, ever since I left the hedge fund world in 2009. I've just a whole series of brand new first starts, new businesses, new concepts, new ideas, new developments, new price points, new influence. And so, I guess my track record speaks for itself at this point. But even without the track record, I had the confidence and the conviction to believe in my own views and visibility and the world the way that I saw it to follow that. And I would never have done that, by the way, if my father was a corporate partner at some firm or some fund or a lawyer, right? Like my friends who come from that background aren't putting up firsts on everything.
Yeah, and it's funny that you mentioned that because I have a similar story. I mean, the best gift, the most important thing my dad ever gave me was mindset, right? Like opening my mindset. I mean, he did introduce me to my very first motivational tape. It was POW, Psychology of Winning by Dennis Wheatley back when I was 17. And my mind was just blown, right? And I just gobbled that stuff up after that. Obviously, I know you're a Tony Robbins guy. I'm a Tony Robbins guy. Mindset, opening up your mindset, it's not something that you're born with or not, right? It can be taught. And so I think learning how to expand your mindset and being an optimistic in terms of how you view the world and what the opportunities are is the game changer, right? Between the really successful entrepreneurs and the guys who follow this linear path that you talk about. And so, yeah, I'm super grateful that I had that. I hope other people listening get encouraged to approach that mindset. And it sounds like you had the same thing. So that's really cool. And I want to talk about a little bit how, you went to this Ivy League school, which is amazing. How did that lead you into this hedge fund? Like, what was the path like there?
If I could just comment and underscore something about the mindset,
Sure.
It really is the game changer, right? So anybody listening to your podcast right now has the ability to change their mindset and actually put in place the proper mindset to achieve whatever goals they may have. Now, I'm not saying that you can just simply say, oh, I want to be a billionaire and like manifest that and that's going to happen. It's a little bit more complicated than that. But you literally have the opportunity on a given day to take a look out your window and say, oh, it's kind of gray and rainy and it's not a nice day. Or you can look out that window and say, oh, it's gray and rainy and I'm glad it's not raining more. And this allows me to do this, that, and the other, and just position everything in the optimistic viewpoint. And that just goes a long way. Tony calls it stacking, but you start to stack these little positive things. And before you know it, you just are a positive person. And then beautiful things happen when you're a positive person. People invite you on podcasts, people follow you on social media, people want to partner with you, people want to invest with you, but if you're a negative person, nobody really wants to do anything like that. And then that becomes your reality, right? That reinforces that and it becomes self-evident and that's your truth. And so I think it's Henry Ford that said, one of my favorite quotes, whether you think you're right or you think you're wrong, you are correct. right?
Yeah.
So like whatever you think is the reality of it. And that's probably my superpower. And if you look at I think it's in my Twitter feed or Instagram or whatever, but I post there that I'm eternally optimistic.
The best
And
is
to
yet to
be an
come.
yeah, the best is yet to
That's
come. I
nice. I
tag that
like
on
it. I
all of
like what
my
you put
posts.
that.
Yeah, and I mean, and it's true, right? Like if you view the world every single day with gratitude and that the best is yet to come, I mean, that's the reality. Every day gets better. If you think that you're upset because you got divorced or you got laid off or you did this or you did that or you don't have the opportunities or why this guy go to an Ivy League school and I didn't and it's unfair, then the best may have already peaked, and like that's not a life worth living. So in any event, we don't need to spend too much time on the mindset, but if there's any one thing that your audience takes away from all of this is that they have the power to control their mindset. I can help you and others with short-term rentals and being an entrepreneur and I can't even speak, tips and tactics and techniques and all of that. But I can't really help people change their mindset. That's something that they have to do on their own.
Hmm.
Turn that off, please. Sorry about the noise in the background
You're
there.
fine.
But in any event, what I would say is this. That's probably the single most important thing that your listeners can take away from this. And now what we can talk about is how we put that into place to answer your question about going through this Ivy League college and becoming a hedge fund manager and so on. And I think you'll start to see evidence of what it is that I'm suggesting. So I was the first person in my family to, as I said, graduate middle school and then high school. I was the first person from my high school to get accepted to Cornell University. So yet again, another first. I applied early decision. So I applied to one college and was accepted. When I was there, I met a great group of friends, was in a fraternity, had a couple of interesting summer jobs, decided to become a double major. Like one major wasn't enough, so I did two majors. And then I kind of wanted to take some time off. My girlfriend at the time, who later became my wife, she was going to go into medical school. So she had a plan to take a year off and go skiing. So I was like, okay, cool. I had skipped a grade somewhere along the way, coming from Costa Rica to the States. So I spoke to my dad and kind of convinced him that, I was due a year. And so I took a year with this lady. We went down to Crested Butte, Colorado, where once again, I'd never done this before, but I talked my way into being a waiter, quickly became like the highest paid, biggest tips at established restaurants. So waited tables at night, skied 100 days, which was amazing. And then I got recruited into a job that was really interesting and basically analyzing all of the data at supermarkets. So this is, in 1992,
Wow.
advanced technology then was, you go to the supermarket and you scan your Weight Watchers frozen meal and your whatever bubble yum. And we analyzed all that big data and helped companies determine what their marketing spend was and what their ROI was and so on. And once again, I was on the premier account for this company that then went public. And then I decided I really had a strong affinity to stocks and trading and finance, and growing up in New York City. And as we talked about earlier, being involved in mutual funds and stock picking with my father, it was something that I really believed strongly in. And I saw sort of the lifestyle that successful investors had. And so I wanted to pursue that. My father was an entrepreneur. He offered me an opportunity to take over his business as he retired, which was amazing. And even more to his credit, he didn't force me into it. He gave me the option, and I actually turned it down. And I said, Dad,
Wow.
I want to make it on my own, just like you did. And to his credit, he gave it to his employees.
Wow.
So, and unfortunately, although they had sat by him for 20, 30 years while he built that business and so on and so forth, he thought that they had picked up sort of his innate knowledge to pick the right product and to price it and to market it and all that. And all they had really done was figure out how to fulfill on the operation side. So once
Oh.
the key decision maker exited, 5 or 6 years later, the business actually went bankrupt, which was, really, really unfortunate, broke his heart. But my point is just, I had this tremendous opportunity, a layup to go into a successful business. I have no doubt that it would still be alive if I were running it. And it was really entrepreneurial back then. He was one of the first mail order businesses in the history of mail order. So he started it in 1946 right after finishing his service in the Army. And the concept back then, and so this will go towards mindset and sort of the world that I grew up in, he thought he was going to sell items to people, strangers, in the mail. All of his friends and colleagues and whoever he surrounded himself with was like, wait a minute, you think that there's going to be somebody in the world who's going to prepay for an item that they can't see and trust that this kid in like the Bronx is going to ship them something, and like, you think that's a business? And he was like, yeah, that's exactly what I'm going to do. And for those of you that have studied business, really one of the most successful mail order anything sort of became one of the most successful business lines you could go into. And it's kind of like in our era, right? Like e-commerce. This was e-commerce before the E. And so he did quite well, and I could have done that. Fast forward a little bit, a friend of mine introduced me to some trading opportunities down at the Chicago Mercantile Exchange. And I started as a clerk, which basically means I got paid like below minimum wage. I think I made $16,000 a year. Wow. I got abused by all the traders, and I, got spit on, pushed, shoved, kicked. You've all seen the movies, but that's where I started. And within 3 or 4 months, I caught the founder's attention of the firm that I was clerking for. And he said, I'm going to back you and you're going to trade my money. And so once again, another first, I became the fastest person to go from clerking to proprietary trader in this firm's history. Wow. And I did that for about a year or two. And ultimately, I decided that while I really liked finance and so on, I just didn't really enjoy the pit environment. And so I wanted to formalize my education, went to arguably one of the finest institutions for finance, and got schooled for 2 years at the Wharton School at University of Pennsylvania. And then from there, I was recruited by a very prominent institution called the Blackstone Group. Unlike all of the other people that came to campus and you submitted resumes and they looked through the resumes, and if they wanted to interview you, they gave you a time slot. The Blackstone Group did things decidedly different. They bought all the resume books from all of the top schools, Stanford, Harvard, Wharton, and flipped through every single one and put little Post-its on who they wanted to meet with. So one day I came home and there was an invitation to meet with the Blackstone Group. And I interviewed multiple times and ultimately was the only associate hired, the first and only associate hired at the Blackstone Group. And at that time, it was $1.1 billion of principal money. The founders, Steve Schwartzman and Pete Peterson, had done quite well, and they wanted $1.1 billion invested. And the mandate was pretty straightforward. We want you to make equity-like returns, so like stock market-like returns with bond-like volatility, and don't lose money. And so like, that's like the holy grail of investing, right? Like if you can do that, it's amazing. And so that's where I got started. And, in that story, you can see, yet again, every single thing that I did was first.
Yeah, no, that's amazing. And so essentially when you were working at this mercantile exchange in Chicago, were you in high school, or had you graduated? It sounded like you hadn't gone to your formal education yet.
Well, no, I had graduated Cornell. I took a ski season down in Crested Butte, Colorado. And then I got the other job that I talked about, big data analysis. And then I left that. So I was probably 24, 25 when I was working at the Mercantile Exchange.
Okay. Yeah. And Blackstone Group, I mean, they're huge. I mean, they're very successful at what they do. So that had to be a crazy feeling. I'd imagine it's a combination of excitement, nervousness, and then also trying to apply the positive mindset as you're going through these interviews at that age.
Yeah, it was an amazing era. And, sometimes I think it doesn't really help me any. So, there's no point in it, but I actually quit that job. So I'm one of like the few people that quit the Blackstone Group.
How long were you there for?
I was there for 2 years. Okay. And there was just the person who was running my group was not a very good leader. Under her leadership, if you want to call it that, we had more than 100% annualized turnover. So every single person that was in the group quit within a year. Wow. And I was one of the first people to join and one of the last people to leave. And finally, I just thought to myself that life is too short and I don't want to be in this sort of situation. So even though there was prestige and very nice paychecks and, lots of other things that I very positively, ultimately at my core, I wasn't happy and I didn't like the way that the business was being run. And so I quit. It wasn't long after that I was recruited by a couple of very prominent people in finance. And I joined a firm called Ramius Capital Group. Same sort of story, smaller. They had about $110 million of the principal money. The principals in that particular group were Peter Cohen, who was ex-chairman and CEO of Shearson Lehman Brothers. So if you've ever read the book Barbarians at the Gate or seen the movie, Peter Cohen is prominently featured, and he did the biggest merger and acquisition in the history of finance in that era when RJR took over Nabisco. And then my other boss, the guy that I worked with on a daily basis, was a gentleman by the name of Tom Strauss, and he was president of Salomon Brothers in his 20s. And Salomon Brothers, for many of you that don't know, back in the day was the preeminent trading institution where they invented mortgage-backed finance, and millions, hundreds of millions of dollars in profits were made. So Salomon Brothers was the preeminent institution if you wanted to be financially rewarded. And so I went and joined these guys, $100 million under management. They wanted us to replicate a lot of the same investment methodology and strategies that we had put in place at the Blackstone Group. And over the course of the next 8 years, through travel and proper investment decisions and raising money and, the forward-looking views that I had and others, we built a team of about 50 people, and assets under management grew from about 100 million to 4.5 billion with a B. And that was all working great until 2008 happened, and the world sort of contracted and shrank and violent drawdowns. And while we actually performed better than all of our peers and competitors, and certainly better than long only strategies, nobody likes to lose money. And at that point in time, I was co-head of investments, and a lesson that I learned was you never want to be co-head of anything in a downsizing environment, right? You don't actually need two heads of anything, right? But so the firm took a easy strategy out, and I totally get it, right? My ex-wife didn't get it. She's probably still bitter about it to this day, but it's a standard playbook. I would have done the same thing. They let both co-heads go, and they hired one new head. And so I found myself unemployed with 3 children, a big brownstone in Manhattan, a weekend house in the Hamptons, all sorts of debt and obligations, and sort of had to reinvent myself.
Wow. Yeah, that's quite the track record. And I can only imagine the stress that's involved in, reporting to those people and managing their money, taking risks, not having to lose it. So at that point, what did you do? How did you pivot from there?
So I spent the next, call it 4 weeks, and for those of you that are listening that don't really understand the gravity of the situation, you have to go back and take a look at the drawdowns, the losses. There was literally blood in the street. And living in New York City, I can't tell you, how scared people were. Scared not only for their jobs, but scared for the city, scared for the country, scared for everything, because it was really, really a violent and turbulent period. And so much so that people weren't even kidding. They were saying, you want to make investments, invest in guns and gold, right? That was the mindset. Go buy as much gold as you possibly can, and then get some guns to protect it and yourself. And so I spent the next, call it 4 to 6 weeks interviewing. And because of my network and because of my background and because of, all of the doors that were open to me, I had dozens of interviews in that time period, because these same firms and individuals wanted to hire me and had headhunters that were trying to recruit me. And I just, in 6 months earlier, 6 years earlier, I was very much in demand. In the financial crisis, they all would take my call and invite me to interview. But interestingly, none of them could even say no, because they wanted to hire me, but they didn't know if their own business, their own hedge fund, their own bank would be around in 6 weeks. So there was just this period of time where nobody was hiring, nobody could commit, nobody saw the future. And that's when I happened to be interviewing. And it was a very challenging period for me, because, I've as an eternal optimist, one of my favorite sayings, and my girlfriend will tell you, I say it all the time. Like for me, a no is as good as a yes,
Hmm.
because then I know and I don't waste any more time. But that uncertainty where it's like, well, I just had a great interview. Are they going to hire me? And a day goes into a week, and a week goes into a month, and a month goes into a year. If I'm hanging my hat on like, well, maybe they're going to call me back, that's a big waste of time. But if they had the courtesy to say, hey, Richard, it's not going to work out, we're not hiring, or you didn't fit with the group or whatever, then I could say, okay, cool, cross that off the list, on to the next one. Said differently, and for those of you that have been in sales, maybe this will ring true, but you know, you have to have the mindset, if you're selling anything, and it could be selling yourself to the seller of the commercial property, it could be yourself to investors, it could be yourself to anything. You know, you have to be capable to withstand, say, 90 no's before you get that yes. So for me, when I get a no, it's like, okay, cool, 89. No, 88. Cool, 87, 86, blah, blah, blah. Oh, I only have 3 more no's to go, and then I'm going to get the yes. But too often people think it's going to be easy, or if they have a good product, the first yes should come. And there's just tons of case studies about different entrepreneurs that were turned down, you know, repeatedly. I think legend has it, and I don't know if it's accurate, but I think Colonel Sanders from Kentucky Fried Chicken was turned down by like, I don't know, 1,000 different banks and investors before he finally got somebody to say yes. And I think Howard Schultz at Starbucks, same sort of mindset. So in any event, I got all these like no answers, which was really frustrating. And rather than dwell in that space, I started running with my dog, and every day we'd go running along the Hudson River, and I started going, you know, from 2 miles to 3 to 5 to 7, and just found that time really refreshing, and the opportunity to sort of think and breathe some relatively clean air. And that led to my next big decision, which was I'm going to take some time out for myself. Like, this is just not a good time to be hired. Nobody is hiring, so it has nothing to do with me. And so I went to my ex-wife at the time and said, I'm going to take the summer and go live in the Hamptons, and I'm going to figure out my future. I'm going to be, you know, I'll never forget the conversation I had one day when she came home from work. I said, yeah, hey, honey, I've got some great news. And she said, oh yeah, what's that? Thinking I've got a job. And I was like, hey, I've got some great news. I'm going to move out to the Hamptons for a couple of months. I'm going to become an entrepreneur. And that's the great news. And she's like, that's the great news? And I said, yeah. And she said, okay, well, tell me, like, you're going to be an entrepreneur. What are you going to do? And how are you going to do it? And like, what's your business? And I said, you know, I don't have a clue, but I'm going to go figure it out. And she's like, I can't believe you think this is good news. And again, it's just different mindset. For me, that was a breakthrough. It's like, hey, I found some light. Like, I've got some visibility, and I'm excited. And like, I have no idea what the future holds, but like, I've got some positivity coming from like this unknown space. And for her, totally understandably not being critical, but like, she wanted some more certainty. Like, hey, how about like a W-2 job, right? Like, how about I got some certainty that money's coming in 2 weeks. And so fast forward, I went out there, and again, I didn't rush it. I kept running with my dog and just thinking and allowing myself space and time, and confident, having faith that this would all resolve. And ultimately, I decided that there was an industry that I knew pretty well. I used to travel in the hedge fund world. I used to travel first class, private airplanes, stay at the nicest hotels, 5-star institutions, best restaurants, wining and dining. And I mean, my quality of life was insane. But the one area where it was always second or third tier was ground transportation. You know, it didn't matter what country or what car or what chauffeur service, ground transportation always sucked. And so I was like, hey, you know, like, that's always a disjointed part of my experience. I have a great experience once I get to the airport and I'm in the first class lounge. I have a great experience in the first class seat. I have a great experience when I'm at the hotel and the restaurant, but like, getting to and from the airport, getting to and from my meetings always sucks. And so I started a ground transportation company, which is still in business today. I've moved on, and so it's not my primary focus, but disrupted ground transportation. Basically started these big Mercedes Sprinters. I was the first person in the United States that took these Mercedes, custom converted them into plush interiors that look like mobile offices or mobile boardrooms or living rooms, and turned those into limos. And now they're common and you see them everywhere. But at the time, I was buying them from wherever I could source these vehicles in Wisconsin and California, shipping them to an upfitter, creating these custom vehicles, and then putting them out at the highest price point ever. And that was my plan. I was like, well, how much does somebody else charge for the next best thing? Okay, well, mine's superior to that. So with zero experience in ground transportation, zero experience with logistics, zero experience with pricing or strategy or all that, my strategy was I'm going to charge a premium to whatever everybody else does. And I'm going to launch this new concept. And within a couple of years, I counted people like Usher, Lady Gaga, Adele. She used our service after winning 6 Grammys, and we expanded on both coasts. And so, my kids thought I was a star, and it was a lot of fun.
Wow, that's crazy. You said it's still going and it's successful now. Are you still the owner of that, or did you sell that?
No, I'm still the owner of it, and we actually transitioned the business model, which is another lesson through all of this. I read a book, a very influential book for me. This must have been around 2016, 2015, something like that, from Singularity University, called Exponential Organizations. And what Exponential Organizations did was take a look at the new business reality. And what I realized was that asset light or asset free was the new way to grow and scale. And so historically, in prior generations, if you owned assets, like if you were Standard Oil, or if you owned real estate, or if you owned physical assets, you could have strength, power, and influence. And in today's world, owning assets, with the exception of real estate, in my personal opinion, is a liability. So assets aren't actually assets, they're liabilities, and they actually constrict you and restrict you from growth and exponential growth and growing faster. And so you just have to take a look at some of the examples that they gave in the book. I'm a big short-term rental guy. Airbnb is sort of my investment strategy. Airbnb is the fastest growing and the largest hospitality brand in the world, and they own no assets. Uber is the largest ground transportation company on the planet, and they own no assets. So you start to take a look at asset-free or asset-light businesses and the rate of growth versus being confined. It takes a long time to buy a car, build a car, warehouse a car, and so on. The point was, I read this book, Exponential Organizations by Singularity University, and I realized that everything that I learned in a prior life about the importance of having assets and building this moat and having a competitive advantage through, like Standard Oil as the example of a monopoly, right? Like they sort of owned everything, that actually became a liability. And so it helped me sort of pivot my business that was successful into something that was more scalable and faster growing. And people, as I knew and anticipated, started copying my business model. And the Sprinter limo today is ubiquitous. I can get one of those in every single city. So there's no point for me to own the assets and try to compete with them. Instead, I let other people have a depreciating asset and warehouse and insurance and so on, and I call on them on demand. So I'm more of like a travel agent now than anything else. And so we can operate globally.
Oh, that's brilliant. That's brilliant.
And by the way, the name of the company is Brilliant Transportation.
That's funny. I had no idea.
Right. So I can't tell you how many times people said that same thing. I was like, you just named the name of the company. And so as I started to grow that business and pivot and change and so on, I started to invest more and more into real estate, and specifically in Airbnbs. And I realized that we were having great success, making a lot more money on Airbnbs than we would if we had long-term tenants. And so I started to invest in a variety of different places. I like to diversify. One of the things that I learned about a portfolio management position was, you need to diversify. No matter how much you love something, things can and do go wrong. And so you need to have diversification. And so I wanted to test it in, well, this works in New York City. Does it work in Colorado? Does it work in Alabama? Does it work in the mountains? Does it work at the lakes? Or is it just like one area where this Airbnb model works? And what I kind of realized, and I filmed a video on my YouTube channel called The 15-Year Plan, was I was going out there and I was getting 15-year mortgages, really cheap money. I was putting it on Airbnb. The thing was cash flowing. Plus I had depreciation expense. So it was a very tax efficient way to go. And just by hosting people in the 50 weeks that I couldn't use it because I was working and had family and so on. So we could go use it for up to 2 weeks a year by IRS regulations. The other 50, we would rent it out. Not only was I getting all the tax advantages and the 2 weeks use, but other people were basically buying my assets for me. And so I couldn't grow quickly enough, right? Like I was creating this virtual real estate empire using other people's money, and I got the benefits of it both in tax and pleasure. And so once I realized that, like the light bulb went off, and I started the YouTube channel Short-Term Rental University, and was sharing with people like all of my success and all of my thinking and how to do it and how to be a hospitable host and what to look out for and how to screen bad guests and how to have pricing strategies. And I mean, it's one of my greatest achievements. I think I've literally changed the lives of tens of thousands of followers. I get messages all the time about what a positive influence I've been in people's life, whether it's a side gig or passive income or people that quit W-2 jobs to pursue this full time. So it's been incredibly rewarding.
That's cool. And I got three kind of questions that I want to talk about from that. First of all, how do you measure your ROI with the short-term rentals? Because there's a lot of factors. I mean, you have your internal rate of return, you got your cash on cash ROI, you've got the depreciation, you got the fact that you can use it and stay there a couple of weeks a year. So like what kind of numbers do you look for and how do you measure that?
Yeah. So what I would say is the following, and this is what I teach on the YouTube channel as well. It's a very personal decision, because the thing about an Airbnb property, unlike say a commercial space or a storage building or whatever, you do have the ability to use it personally sometimes or not. And generally speaking, I teach people to invest not from a quantitative perspective, like how much money am I going to make, but more from a qualitative perspective, which is connected to your why or your emotions or so on, right? Because if you find an asset that you really love and you can use it, and let's say it breaks even, maybe that's a wonderful investment for you and your family. Or I've shared with certain people that maybe you can't afford, I'm just making these numbers up, $2,000 a month for your dream lake house, but you could afford $500 a month for your dream lake house. So does that make it a bad investment? No, it makes it a great investment because now all of a sudden you have your dream lake house at the price point that you can afford. So I'm happy to answer your questions from the quantitative perspective because I think it's really important. But I also really encourage people to think about their why and why they want to get into this space and what their goals are, because it's binary. Like either you get off the start line or you don't. And so if you get hung up on, what do the numbers look like, you may forego 10 years with your family and your young kids canoeing on the lake. And we've all seen those, I think it's MasterCard commercials, like what's the price of that? That's priceless. And like once your kids grow past that age and they have lives of their own and families and so on, like you're not getting back those 10 years on the lake with your kids. So, it's really important that we put the investment opportunity set into a deeper, broader context that can really affect and talk about mindset. If you're spending quality time with your family and you're enjoying that and you're positive and your outlook is positive, you will go back to work and you will make more money. You will get a bigger bonus. You will get a raise. You will find the next opportunity. But if you're constantly waiting, oh, I can't afford that. I can't afford that. I'm not going to do that. I'm not going to do that. I'm going to save for a rainy day. Then that becomes your reality. Your kids pass those 10 years at somebody else's lake house. You're still stuck in that job. So this can have a much greater exponential return on investment than what can be measured solely by sort of IRR or ROI or cap rate. And I'm happy to drill down on that some more. But to answer your question, what we're seeing in the space right now, and I mostly compare the Airbnb space to multifamily because that's sort of the same, you've got tenants, you've got leases. In our particular case, they're short-term in nature. In multifamily, it's 12-month leases, long-term leases. What we're seeing today, and this will change, as more people listen to my YouTube channel and join our Facebook group where we have 26,000 peers, and you're a member of that. There's great information, so it's not just Richard, but 26,000 global hosts from all over the world sharing risks, concerns, opportunities, strategies, commentary, problems, solutions. It's a remarkable free resource, the Short-Term Rental University Facebook group. What we're seeing right now is a return on your investment about 2.5 to 3 times greater than if you went for a long-term rental. So if you have a long-term rental and you make $1,000 a month, and that's a, call it 5 or 6 cap rate or something like that, you should see, when done properly with a lot of the strategies that I teach on the YouTube channel, 2.5 to 3 times more profit than you would if you were to rent that out long-term. Now, there's a lot more work involved. So, like, I'm not saying it's apples to apples, but in terms of just quantitative return on investment, it's far more profitable. It does require more work, but there's other things that offset that as well. Like, there's less wear and tear on your property. You can use it, right? If you've got a 12-month rental at this lake house, you can't really say, hey, buddy, you're going on vacation. Do you mind if my family moves in? Like, it doesn't work that way. So, you have to take the good with the bad.
Yeah, that's great. No, it's a good perspective to think about in terms of quality of life. Because like, you're going to vacation somewhere, right? So if you own that property and you can monetize it, then you go there more frequently, that's something that is hard to measure with an IRR. So thank you for that perspective. Now there's also, though, because I've got a couple and they've done phenomenal for me. I mean, I haven't measured, it's because it's hard, right? I haven't determined how I'm going to measure the cap rate. Just the fact that I was lucky enough that I got these properties. They were very, very great prices. And then I fixed them up, and then I found out about Airbnb after the fact. And so it's been hard to think about scaling that because, the price of real estate is just going up so high. And like you said, the amount of time and attention that it takes. And so there's obviously cases too, I'm guessing, where you buy houses for short-term rentals that you'd never have any intention of renting out. I mean, of actually living there, right? Like, of actually vacationing there. Some of them are like that you buy are strictly speculative, or not speculative, but they're strictly investments, right? Like, they're not really necessarily going to be like your vacation spot.
Yeah. So what I've actually done, I've never done what you just said. I kind of skipped that stage. And what I've done is I've moved into larger scale short-term rental properties. So I've been buying up boutique hotels. I've been looking at land to build short-term rentals on. I've got 50 acres right now down on Hatteras Island in the Outer Banks of North Carolina. I'm the second largest landowner there behind the US government that has it as a national seashore. So, like, that'll never be developed. So there's Uncle Sam and the US government, and then there's Richard at Edge Camp Sporting Club. And so I'm doing something I've never done before. I'm doing a very large development project. Like I said, we have about 50 acres that we will be developing over the course of, call it, the next 3, 5, 7 years. And we're building single family short-term rental properties there. And interestingly, most developers de-risk at the end of the build cycle. Like, that's their goal. Like, I'm going to go buy land, I'm going to do all the hard work, and then I'm going to sell it, I'm going to flip it, and I'm going to exit, I'm going to de-risk, and then I'm going to do it again. We have a slightly different business plan and model, in the sense that I think it's one of the best places to do short-term rentals. It's got a very bright future. The demand is off the charts. And so consequently, why would I sell it to someone else to do a short-term rental? We're going to hold it, or in Bitcoin language, we're going to hodl. And so, like, again, just a whole different perspective. When I couldn't find homes that I wanted myself, I found land, and I'm building, and I'm in a space I've never done before. And one thing I'll share with your listeners is, you create wealth by concentration, and you diversify to maintain that wealth. So for me, when I saw this opportunity, and it started small, I bought 1 plot of land, and then 2, and then 4, and then 8, and then 10, and then 12, and then 16. And then next thing you know, I went all in. I said, I'll buy it all. It's a very concentrated bet on something I have very strong conviction on, but it's a diversified portion of my portfolio. It's not my entire portfolio.
Okay. Yeah, because I know now you've got a heavy footprint in Bitcoin as well. And so I know we're coming to the end of our time here, which I feel like we're just getting started. I feel like we're just getting to the good stuff, because I mean, I feel like we could talk a whole hour about, just the specific short-term rental strategies, specific Bitcoin cryptocurrency strategies. But yeah, I want to be respectful of your time too. So maybe we'll just have to schedule a round two. But
Cool.
but yeah, so it sounds like I love you saying the best is yet to come. So it sounds like with short-term rentals, there's still a ton of upside. It doesn't seem like you see this being saturated by any point right now.
So I have, maybe it comes as no surprise, a very strong view. I could be wrong. I don't think I am. Historically, I'm not. But I really think that what we're seeing here in Airbnb space is a change, a generational change of consumer preferences and consumer behavior, and the way that people are going to travel and live. And COVID, as terrible as it was, has really accelerated all of that. So now we see the advent of remote education and remote work, and people choosing, lifestyle more so than like sitting in a cubicle. And so I think that there's a ton of opportunities if you start to think forward about how people are going to live and work and play and recreate and wear and what they're going to do and what they're going to avoid. And you just position yourself, intelligently on a forward-looking basis, which is, what I'm doing. I think the best is in fact yet to come. And you mentioned Bitcoin earlier. Airbnb and Bitcoin share one characteristic in common that I think is really worth the listeners, pausing and reflecting on. So historically, people in finance and in, investment strategy, the people that made the most money were the most educated, the most networked, the most successful, the most schooled. They worked at firms like the Blackstone Group and Goldman Sachs and Solomon Brothers and Shearson Lehman, like all the things that I mentioned earlier. They would get the first bite at the apple. They would see the right opportunities. They would be there early, and then they would sell to you and I and other retail investors. Bitcoin is the exact opposite. Bitcoin, the individuals, the mom and pops, got to Bitcoin first. The institutions didn't understand it. They didn't believe in it. They were dubious. They were skeptical. They're just getting there now at 57,000. But if you take a look at, YouTube and Twitter and so on, it was individuals that have been buying it and holding it. And the same is true for Airbnb. So if you take a look at real estate right now, there are hundreds of billions of dollars of institutional private equity in syndications for multifamily, for industrial, for retail, for commercial. I mean, there's different asset classes in real estate, and there's hundreds of billions of dollars of institutional capital from the likes of Blackstone and other big Carlyle, KKR. Like they invest in all of these broad real estate asset classes, but they don't yet in the short-term rental market. Once again, it's individuals like you and I that went out and bought 1 and 2 homes that are owning the Airbnb rental market. Now that'll change. Just like the institutions are knocking on the door at Bitcoin, institutions are knocking on the door of short-term rentals. And for your listeners and for myself and my audience at Short-Term Rental University, I encourage people to buy as much as you can right now, because the best is in fact yet to come. And when this institutional capital comes in, they have a lot more capital, they have a longer time frame, and they can afford to buy this at different price points. So residential real estate still trades based on comps and what your neighbor paid for it and how many square feet and how many windows and all of that stuff. The rest of the real estate world trades on cap rates and income, but Airbnb does not yet currently, and it will. And if and when Airbnbs start trading on the income that the property derives, you will see a bump up or a jump up in the valuation.
Yeah, that's good, because I get these people calling me all the time because I have multiple properties, just asking if I want to buy, what would be willing to pay. And I just feel like saying, I'm not selling to you unless you're willing to give me a percentage of my, multiple of my earnings on my Airbnb. You willing to do that? Otherwise, this conversation's done. But I haven't said that, but I've wanted to say that to them a couple of times. So it's interesting that you bring that up.
Yeah, no, and I mean, that will happen. I don't know if it'll happen in 12 months or in 12 years, but that will happen. It's happened in every other real estate and also income producing investment opportunity. So it's just a matter of time. And the fact that we're not there just means we're early.
Yeah, that's great. Well, and then yes, when is your next event, the short-term rental university? I know you have summits or masterminds every several months, right?
Yeah. So I started doing a couple of live events a year. I did one in 2019 in Nashville, my first one. We sold out and had, I think it was about 35 or 40 people there. And then based on the success of that, we did it again later that year in Miami. We sold out. And if you just take a look at the Facebook group and on the YouTube channel, I mean, literally people's lives have changed. They've changed directions, they've grown, they've scaled, they've raised money, they've gone from single family to buying hotels, like just the amount of transformation by being close to me and 40 other entrepreneurs in this space is remarkable. And encouraged on that success, we're doing one right now at Edge Camp Sporting Club on Hatteras Island, where I've got all of my development, and people are actually living and breathing and staying in this big 14-bedroom, 12,000 square foot property that we built for short-term rentals. And just on that note, nobody's ever built anything that big or of that size on Hatteras Island. So that's a first.
Wow.
We just broke all sorts of records. We just got the property appraised for more than anything on Hatteras Island ever before. We
Nice.
just broke records for the average daily rental. It's never been seen on Hatteras Island before. And for the first time ever, the Sound or the Bay is trading to a premium to oceanfront, which has never been done before either. So when people say that things can't be done, I have a track record of saying, well, why not? And let's give it a go. And so the point is, we're going to host on May 1st through the 4th, 40 entrepreneurs that are going to actually live and breathe and stay on property, so that they're going to actually feel what I talk about when I say attract your tribe, create something that's memorable, deliver incredible hospitality. They're going to live, breathe, and like live there. And then based on the success of that one, we've opened up a second one a couple, like the next day, May
Is that one
5th
sold
through
out? The first one?
there's about 10 seats left in each right now. I haven't even advertised it on YouTube. And remarkably, we did an analysis, something like 50% of the people that bought tickets are repeat. They're coming back. And something like 10 or 12% or something like that have attended Nashville, Miami, and are coming back to the Outer Banks. And these people are taking time away from their work, from their families, for their kids. The ticket price is $3,000. So it's not a small ticket, but they're paying for travel, transportation, food, lodging, etc. On top of all of that, that's the cost of admission. But they're getting incredible returns on their investment. And I just absolutely love seeing their growth. So if anybody wants to come, we can get you a link that'll link them to the checkout page and give some more information on it. But
Great.
it's
I'll put
it's
that
a
in the show notes.
concentrated experience for a select few people, and it's designed specifically to take people to the next level. And we now have proof that it really does inspire, motivate, and guide people. People have literally followed the playbook that we've revealed, changed their entire investment strategy. I've loved seeing it. Sell multifamily in California, go out and buy single family in the locations that we identified. People have actually done that and changed their lives.
Wow. Wow, that's amazing. Yeah, I'm definitely gonna look into it too, because you might see me out there.
You should come. It's great, and it's something I look forward to. It's changing lives is incredibly rewarding.
Yeah, well, you're very generous with your time and your knowledge, because you're giving away secrets that help you make a lot of money. And so, I appreciate it, and I know a lot of your audience appreciates that too. So I just want to say thank you for that.
Yeah, I would just say, part of it is giving back, and part of it is, again, the eternal optimist mindset, which is abundance, right? Like,
Mhm.
I'm not in competition with anybody else. Nobody can copy my brain or my strategies. I can tell you how to do it, and you have to go do it yourself. And so I'm happy to share. But realistically, I protected with a moat all of my investment strategies for my first part of my career on Wall Street and in the hedge fund world, right? Like, we didn't talk about any of this. In fact, we were prohibited. We would be fired if we gave an interview.
Wow.
And so to get onto YouTube and start to give away everything was a very big shift in mindset, and I've grown exponentially as a result of it. So the rewards for me personally are enormous and incredibly gratifying.
Oh, that's great. So yeah, I want to give listeners a chance to connect with you and follow your groups. I know it's Short-Term Rental University on Facebook. There's Ready Wealth Management. That's also the group on Facebook. What's the name of the YouTube channel?
Short-Term Rental University.
Cool.
And just to differentiate a little bit, so Short-Term Rental University really has a focus on real estate investing, on single families, on Airbnbs, and from single family, I guess, all the way up through hotels and developments and everything. But the concept there is just short-term rentals. Ready Wealth Management is more investment focused. It tends to have a strong bias on what I think is the most compelling investment opportunity potentially in my entire career, which is moving from fiat currency, which is devaluing and debasing, and 1.9 trillion stimulus just passed yesterday, which actually really hurts individual investors more than it helps, into a programmatic, blockchain, decentralized cryptocurrency world. And if I could spend just one sentence on it, I would say it's the best is yet to come. It's kind of like the early days of the internet. And so while you may be dubious or skeptical or concerned, rightfully so, you should spend some time and become educated. And so we created the Ready Wealth Management free Facebook group to help people along their journey. There's nothing for sale. It's all just information, but it's curated, it's intelligent. There's no pump and dump. It's very different than like Reddit. It's meant to be an intellectual academic approach to education as opposed to just pump and dump.
Yeah, no, earlier this year, I quadrupled my Bitcoin holdings because listening to you and some of your podcasts and your events, just talking about the stimulus packages and the inflation that we have and what are the long-term results of that. I mean, all points to having a decentralized cryptocurrency that's not government backed, monopolized or fiat backed. And so, yeah, thank you for that, because those are doing really well right now too. Do you have a price point, like a potential upside that you see for Bitcoin?
So what I would say is as follows. Most people that I speak to sort of get scared off and they're like, oh, 57,000 and I missed, the run up and it's too late and it's too expensive and so on and so forth. And I just like to put that in a little bit of perspective, which is that it's not too late and you didn't miss the run up, and it's a much safer bet today at 57,000 than when I started getting in the 2000s. There was a lot more risk in it then. And so consequently, I think it's still very early days. And I think over the next decade, you're going to see somewhere between 10 and 20x returns, which would put this thing at 500,000 to $1 million per coin. So,
Wow.
If you take a look at that upside, and by the way, this has the opportunity to disrupt all of this bread and butter that this podcast focus on and I focus on, which is real estate, right? Like cryptocurrency and Bitcoin in particular is literally killing off other investable asset classes. You take a look at gold. Gold is trending down and Bitcoin is trading up. And that's people, institutions selling gold and buying Bitcoin. At a certain point, people are going to start to take a look and say, well, do I really want to buy that strip mall? It's going to cost this much and I'm going to have to do this much work and so on and so forth. And I already have 3 other ones, or should I just leave my money in Bitcoin? So I feel very strongly that there's an incredible opportunity ahead of us. And so much so that I started the Ready Wealth Management group to try and help people along and hold their hand and get comfortable and do it from a place of intellect and academic study and research, so that it's not just like, well, I got to believe what these pump and dumpers are saying on Reddit. And like, I have no idea what's going on, but the momentum's going my way. There's real reasons for all of this. And so we're trying to discover them and relay them.
That's great. Yeah, I paid my tuition in the School of Hard Knocks by throwing a little bit of money at those Reddit things under peer pressure of my friend, and I paid the price. lost it all. I was like, it was about 1%. It was less than 1%. It was kind of like a gamble, had fun money. But at the end of it, I was like, I knew better. I knew better than that. I don't know why I did that. I gave in the peer pressure. But yeah, like this is, like you said, this has already, the reason it's more expensive is because it's been de-risked. The risk has gone down, therefore the price has gone up. Now there's still huge upside with the reasons that you talked about. So I'm bullish on Bitcoin. Will I be bullish forever? I don't know, but I've got like a 5 to 10 year timeline where I think there's really, really good things to come.
Yeah, just total. The easiest thing to do is dollar cost average in and don't sell. That's it.
Yeah.
It's not that hard. There's not a lot to teach. You just have to have the faith and conviction and confidence that you know what it is. And sometimes people overthink and they make something that's really simple and make it really complex. And there's no need. I'm here to share with you, it's that simple. Just dollar cost average and hold, and you'll be very happy.
That's great. Well, thanks so much for your time. Yeah, I'll post these links that we talked about in the show notes, and hopefully I'll get to meet you here in person at one of these events pretty soon.
That would be awesome. I really appreciate your time, and I hope the audience found this insightful and encouraging and optimistic, and the best is in fact yet to come. And I hope to see some of them. If you guys come over, drop me a line and say you heard about us on this podcast, and we really appreciate it.
Yeah, absolutely.
All right, man. Have a good day.